Guys, are there any other questions before I start with this for the material with tonight's material? Gone. Okay, cool. Let's see what we can cover tonight. Okay, so these are the various stages of the audit process. As I discussed in the beginning, preliminary engagement activities we've already discussed, planning and audit, obtain audit evidence, test of controls, substantive procedures. Based on the results of the audit at that point, we need to evaluate. We evaluate all the findings, we evaluate all the results, all the comparisons, all the recalculations, all the analytical procedures, etc. that we've performed, and we arrive at a conclusion. And then we do reporting. And we determine whether we have a qualified or unqualified opinion. Now I'm going to pick. Kurt, can I ask you a question?
Go for it.
If I have a qualified audit opinion, is that a favorable or unfavorable opinion?
Can you just repeat it again?
If I have a qualified audit opinion in my audit report, is it favorable or unfavorable?
I'm gonna say favorable.
Okay. Robin? Robin Jones. Just remember, you guys are on mute. If you're answering, you are on mute. Edwina? Kurt, it seems like you were the only brave one. Ellen?
I would say it's not a good thing, unfavorable.
Okay, so we have one favorable and then unfavorable. Edwina, I see you unmuted. What do you say?
If the question is if you have a qualified audit opinion.
Yes. Is it a favorable or unfavorable opinion?
Unfavorable.
Okay. Timakazi?
It's unfavorable.
Yes, guys, it's an unfavorable audit opinion. What does qualified mean? It means a normal audit opinion would read, based on the procedures executed, we can provide reasonable assurance that the financial statements are free of material misstatements. The moment I say except for, it means I qualify my opinion. There's a qualification in. So everything is fine except for. The moment that you have that except for, it is an unfavorable opinion. Very important that you guys remember that, because this module is eventually going to end up in reporting. You guys will have to do that report, and you will see that there are a few audit reports. The worst audit opinion that we can give is none at all, where we abstain from giving an opinion. That's an adverse opinion, meaning we don't say anything. We withhold our opinion. So if you're an investor and you go through the financial statements, Judy, and you see that the external auditors withheld their opinion, would you invest in that company? Judy? Guys, I'm going to keep on asking questions. This must please be a participative class. I know some of you guys might be having problems with the mute. Judy, can you just please indicate whether you can hear me? Otherwise, over to Robin again. Nasiwe.
Yes, I mean,
So what do you guys, Audrey, I see you also unmuted. Between Audrey and Asiwe, if you go through the financial statements, which always includes the report of the external auditors, and the opinion has been withheld, would you invest in that company or not?
I would definitely not.
Definitely not.
Definitely not, yes.
Yeah, because auditors are bound by confidentiality clauses. They can't immediately announce to the public, don't invest. Okay, so you guys all know what happened to Steinhoff. Steinhoff shares usually hovered here in the direction of 65 Rand per share. And when the external auditors decided to withhold their opinion, we all know where that share price went. People immediately got rid of their shares and the share value plummeted. That's just an indication of how severe that audit opinion is and how people do rely on external auditors' opinions. Okay, so all the current rate, that was AUE3701. Let's deal with 3702. So we will be focusing on substantive audit procedures, evaluation, conclusion, and reporting. Audit evidence. So audit evidence is what you gather and on which you will apply your audit procedures to be in a position to express an opinion. So you arrive at the client give you their financial statements and their trial balance, and you have access to anything else that you need to substantiate what they've given. But the information that you obtain must, as a minimum, meet the following requirements. It must be relevant, it must be concise, and it must be understandable. If you don't understand what you are auditing, can you express an opinion on it? Definitely not. If it's presented in a way that is not understandable, that immediately raises questions as well. So always make sure that you understand those three terms. It must be relevant, must be concise, must be understandable. Now, how do we obtain audit evidence? We inspect. Inspect means we physically go somewhere and we check that what they said is actually happening. If they've informed us that a specific process within their company, let's say the way they do the bottling at a big milk factory, let's say Clover, we can go and we can inspect the procedures that they say they apply. We can observe. In other words, we just look. We see that they said that the moment they place an order, these are all the signatures that they need to obtain. The invoice travels from the workshop to finance. We can observe. We can see it. We can get confirmation. Confirmation is where we say, for instance, we look at our debtors. So our debtors, if you recall from accounting, is an asset. What is the biggest risk of an asset to the external auditors? If you think about a company that wants to do something that is wrong in their financial statements, what would they do with assets? Would they overstate or understate? Audrey?
Hi, I would say they would overstate.
Definitely, because what are you doing with your financial statements? You take them to the bank to obtain a loan. So the more favorable it looks, the bigger your chances of getting the loan. So overstatement of assets is something that you would like to put through obtain audit evidence on, and confirmation is one of the ways that you will make sure that people we say owe us money is in fact actually owing us money. So if we look at our debtors, we see all the people that owe us money. So that money is ours, and that makes it an asset that can be overstated. So we will confirm with those debtors that what the company, our client, says they owe them is in fact what we are being owed. Is everybody, if I didn't say that very accurately, please participate. Okay, English is also not my first language, so I can also stumble over my words. So please, this is your session as well. So confirmation is that is what I meant with confirmation, is we employ certain audit procedures that will put us in a position to confirm that certain balances are accurate. Then we will recalculate. We will obtain the necessary audit evidence to be in a position to recalculate. Reperformance. In other words, we saw what the client did, we obtained their processes, and for that specific account, we can actually reperform. Just remember, all these methods that I'm using here, they are not applicable to every account. So you must look at your area that you want to test. Say, for instance, the account that you want to test. Remember in the beginning of the session, I said we are auditing the trial balance. There we have all the accounts that goes to the financial statement. So each one of those accounts can be tested, and we can extract audit evidence from it by using one of these methods. With some of those accounts, we can use multiple methods. With others, we can only use one or two. So that is important to understand, that you can't use all these methods. You can't reperform everything. We don't have the time. We are only there for a certain period, and in that period we need to arrive at a conclusion in our audit report to be able to express an opinion on those set of financial statements. So we need to use the time that we have at the client extremely effectively. Otherwise we won't have enough audit evidence, or we wouldn't have been in the position to have scrutinized enough audit evidence to be able to arrive at that opinion. So these are just examples of how we would go about obtaining audit evidence. The last one is analytical procedures. That is the one I spoke about earlier, is where the inventory value was specific value. It ran between two nicely closely aligned parameters, and then suddenly in year 5 it dropped, or it skyrocketed. We need to understand why. What was the reason that we did that? Because remember, we just spoke about assets. The biggest risk of an asset is overstatement. What is the biggest risk of our statement of comprehensive income? If we look at the profit that we get at the end, overstatement or understatement? It depends. It depends on who we want to impress for whatever financial benefit. If we want to defraud SARS, we would obviously want to have a loss. If we want to attract investors, we would want to have make it more profitable. And if you guys can recall from accounting, how do we affect cost of sales? Through inventory levels. The opening and closing value of inventory affects cost of sales, and thus it affects the profitability at the end. So that analytical procedure, if employed correctly, could have indicated that there might be something wrong with the inventory levels. We maintained a nice inventory level over the past few years, and suddenly in the current year we dropped it. Kurt.
I just want to confirm, Charles. So the
Yes.
actual analytical procedure is to analyze inventory levels over a space of 5 years.
Yes, Kurt. That is, I'm using inventory now for as an example, and the period is also not set in stone.
Okay.
So I can substitute that with a very practical example that I actually encountered. We were part of an audit team that audited Unitrons. You guys might know the Unitrons trucks, but we audited their dealerships. And at one of the specific dealerships, we looked at debtors and creditors. And we decided to draw a sample of credit notes. And we drew the same type of report for 5 years. So we looked at the number and value of credit notes passed over the past 5 years. And we saw that in the current year that we were auditing, there was a drastic, erratic movement. There was like suddenly there were a lot, suddenly there was nothing, suddenly there was a lot. So it indicated that there was a disruption. And obviously we don't suspect anything that to go wrong. There might be a reason. There might be we suddenly are making use of bad products. And so people will buy from us on credit, and then they are not happy with the product that we've installed, and they will bring it back, and we have to issue a credit note. But what this specific workshop manager did, together with the parts manager, is that when one of the biggest clients came in, we had a big account with them, they would obviously issue the products that the client bought and updated the account correctly. But then a small company will come in, a small client, who will pay cash for, say, for instance, a piston or a valve. And he purchased the valve from us cash. The moment that the person left, we raised a credit note, took the cash, and placed that amount that's now currently outstanding, because we are telling our system that the client he brought the product back. We're now telling the system, but that bigger client sold it. So that amount that was paid for in cash suddenly became a debit through fraudulent entry, and it was taken to the bigger client's account. And at the end of the month, when that big client wanted to get the statement, what did they do? They immediately issued a lot of credit notes to take off all those items that obviously the big client wasn't unaware of, and they posted it to another client. And so they played around, and eventually they got caught, obviously, through analytical procedures. And it was an analytical procedure that wasn't even planned or part of the original audit plan. So you guys can see why all these items, inspection, observation, confirmation, recalculation, reperformance, analytical procedures, are all extremely important in obtaining some form of audit evidence. Okay, did I answer your question there?
All good, Charles. Thanks.
Cool. Everybody, anyone else a question on that? Moving on. Audit evidence. Guys, please go through ISA 500. That's the main standard that is dealing with audit evidence. We're going to talk about auditors experts. We are going to talk about internal audit, in the initial audit. So that is where we perform our very first audit at a client. What are the stuff that we need to look at? Accounting estimates, audit sampling, external confirmations, and written representations. We are not going to get through all of them, but this is just to give you an indication how we will explain it. I'm not going to go through a lot of theory, but I'm going to try and explain it in practical sense, and then we will do a question. So I'm going to go through some of these items now, and then the class will end. And then next Wednesday, we're going to finish it and do a question in class. So please don't miss that class, because that is where we're going to identify the skill and how you need to read a question and how do you need to apply exam technique to be able to do that question. So ISA 500, like I said, is the theory of audit evidence, and it also deals with management experts. So there needs to be a clear distinction here. So you arrive at, always see yourself in a practical sense. You arrive with an audit team at a client. and you need to obtain audit evidence. You have various avenues to explore to obtain this audit evidence. One of them is a management expert, but it's extremely important that you understand who is a management expert. It can either be someone that is employed at the client, so there you need to consider objectivity, because you are auditing the client. So will that management expert really give you objective information? Because he might be conflicted, not that he wants to commit fraud. So you guys must never think we want to find fraud or see everything through the with the fraud hat on. But if you are in that position of the company, what are you going to defend? By nature, you are going to be inclined to defend the way that the company is doing something, because you have based your expert opinion on something that the client, that company did. So you might actually believe, I'm going to put it down nicely, you might actually believe a lie. So you're not willingly committing fraud, but you're not taking a step back and thinking, are we really doing this correctly? So that is what the auditor needs to do. Before the auditor decides whether he needs to rely on the management's expert, he needs to consider the fact or the possibility that there might be an objectivity problem here. Then also it can be a third party. The client can make use of a third party as well. So if we're talking experts, we are talking about, let's say, a mining company. I don't know why I like to use the example of diamonds, but a specific mining company might use external experts to value their diamonds. If I only had access to these two avenues to confirm the value of the company's diamonds, because that's what we as auditors need to do, we need to give an objective opinion that the value assigned to that inventory of diamonds is accurate, and I need to decide between the employee of the client, who is also an expert, qualified expert, or the third party engaged by the client, I will definitely go with number 2 more. But the next part is also true. Remember the importance of always demonstrating objectivity when placing reliance on audit evidence. That is not just applicable on this section. You need to evaluate all audit evidence with that paragraph, objectivity. So we are talking about a management expert and whether we should rely on it. So obviously the employee, if we can avoid it, we will. A third party, more reliable, but we still need to, as auditors, we need to establish if that third party is reliable. We will test their objectivity. We will investigate the fact or investigate the possibility that there might be a conflict of interest between this third party and our client. Are there any related businesses or related holdings between the third party and the client? Anything that can obscure the client's or the third party's objectivity. So it will be better to obviously rely on the auditor's expert. That is where we come in and we look at the trial balance and we see the inventory of diamonds. None of us, not individually nor as a group, have any knowledge on how to value diamonds. But we are not diamond valuers or evaluators, are we? We are audit specialists. And by being an audit specialist, we know that we are allowed, if we follow the correct ISA standard and protocol, to employ an auditor's expert. So the decision to make use of an auditor's expert will hinge around whether the auditor decides that it is not possible to obtain sufficient appropriate evidence without using the work of an expert. So remember those first 3 blocks that we said. We said it must be relevant, concise, and what was the other one? Relevant, concise. Guys, are you still in this with me?
Understandable.
Thanks,
Yes.
So obviously, let's see where you have your hand up. I might have missed it.
No, it's fine. It's okay. I was going to answer from the question.
If you
Thank
see me
you.
ignoring your hand, please interrupt me.
I'm sorry.
No, you guys are, please, this is a discussion forum, and that is the only way you guys are going to benefit from it is if we discuss and talk about it, because that's the purpose, is to make it practical and explain some of the things that you might only have seen in theory, where I might have seen it in practice. And I can explain what it really looks out there. And then when you have a question in the exam, you can also approach it a bit from a practical point of view, and that's a skill. And that is the whole purpose of facilitation, of this whole session, is to obtain that skill of thinking about stuff more practical, not just from the textbook. Okay, so obviously we said the auditor's expert. In other words, we as a team won't be able to obtain the necessary evidence to say conclusively and reliably, yes, the value that the company has arrived at, our client, is accurate. We won't be able to say. We won't be able to make that call. We need an expert. So note, it is not a management expert. It can be internal or external. The company that I did my articles with, Ernst & Young, was a big enough company to have had CAs who also had engineering degrees. They were also engineers or chemical engineers, and they were CAs. So you can employ someone that's a tax expert, for instance. You use internal, or you can get someone from outside. It all depends on your resources. Guys, and the last point that I want to stop at, internal audit we will discuss separately, is initial audit and the opening balances and why that's important. So it specifically says initial audit. So again, put yourself in the practical sense. You arrive at the client, you are given the trial balance and a set of annual financial statements. What is the form or format of annual financial statements? Annual financial statements gives you the current year and the previous year. Did we audit the previous year? No, but it was audited by someone else. So we need to ensure that the opening balances do not contain any misstatements that can materially affect the current period's financial statements. There must be appropriate accounting policies reflected in the opening balances. So you must think about this practically. If the previous auditor or the previous year's closing balance was 10 Rand, and in the current year we are opening with 8 Rand, that is a big question mark immediately, because we didn't audit the 10 Rand or the 8 Rand, and the only evidence that we have is the audit opinion of the previous auditors and the work that they did on the 10 Rand, not the 8 Rand. So obviously we need then to employ audit procedures to ensure that the change from the closing balance of the previous year to the opening balance of the current year, that movement is correct, because remember, there can be subsequent events. Okay, you guys are all still remember, I think it's IAS 10 from accounting, subsequent events. So that is why it's extremely important to understand that, and it's, yeah, ISA 510. Guys, I think I'm going to stop it there, and I'm going to open the floor for questions. I see our time is up. Any questions that you guys have? Think about that. I'm going to give you some of the closing notes, and then but think of your question. Keep it. I'm going to open the floor now. Guys, please go to the chat section. Remember to put in your student number if you haven't done so already. Please go to Adele's message that she sent at 17:25. There's a link that she placed in there, attendance register. Please click on it and complete that attendance register. And also, I think Adele, there might be a link for the evaluation. Yes, 17:56. She posted a message for feedback or evaluation form. It takes 20 seconds to do that evaluation form. Please complete it. It will assist in the way we continue. This is the first class that we've had in this module, and obviously that evaluation will assist. Are we doing it the way you guys want to? Do you think you will get benefit from it? So please, it's your session as well. We can't fix that what we don't know, or we can't continue with something if we don't know it's being effective. Any questions, guys? I'm going to mute my mic for say 5 minutes, and if you have a question, you can just unmute your mic and just ask. You don't have to raise your hand.
Charles, on the analytical procedure, it
Yes,
was
good.
an area which I did not fully understand in AUE3701 for the section where we have to actually, from the content or from the scenario, we had to draw up an audit strategy, meaning that we have to decide, are we going to employ test of controls, substantive procedures, and analytical procedures. So the decision to employ an analytical procedure, what leads you to employing that? Is it because inspecting, observing, recalculating, reperforming did not work? Or is it actually because of the nature of the account that you are testing?
Your last answer is the best one, Kurt. It is the nature of the account that you are testing. Analytical procedures are mostly employed on your statement of comprehensive income, where we compare expenses. So if you think about a normal GL, and some of you guys might have worked in a situation where you've seen a GL. So you can have thousands of accounts that are grouped together eventually, and they make up the trial balance. So we don't test those accounts specifically, but we can test certain of those expenditure accounts, and we can see over the past, say, 5 to 6 years, or whatever the period is that we have information for, the balance was consistent, or the balance was seasonal, or we can even see that usually during July of each year, there's a dip. Why wasn't there a dip this year? Usually, so we can, analytical procedures shows you patterns and trends, and where you have those patterns and trends, you can see where there's unusual spikes or unusual I don't want to say irregularities, but anomalies. Then obviously you circle that and you go to management and you say, I've looked at your financial statements, and if I look at the archives over the past, I'm going to use 5 years again. It's not set in stone. Just remember that I'm using 5 years as an example. Over the past 5 years, your sundry debtors or your inventory levels or your debtors or whatever the case, whatever you're looking at, was a specific value. Why did it change this year? Why did it have such a massive effect? If you think about, let's use a good example. Let's say 4 years from now, you are auditing an insurance company, and you see that in 2020, there was a massive spike in claims. Being in 2020 at the moment, we all know that it is the pandemic that has struck this country, and a lot of new insurance claims are making their way towards insurers. So obviously the analytical procedures will pick that up, and we will have a good reason or a good explanation as to why claims were higher in that year than in any other year. For instance, that's just a basic example.
So in an analytical procedure, the audit evidence you are looking for is the reason why a certain account has a certain activity. Using your example, a spike in the current year that we are auditing.
That will be more the audit procedure, Kurt.
Yeah.
So the audit evidence is the trend. So the audit evidence is the trend that you've identified. So the evidence is you've identified an anomaly. The audit procedure will be to go and investigate. So if I have to use one of those, how do we obtain audit evidence? We investigate and do analytical procedures. So we've done analytical procedures to identify the trend. That's our audit evidence. And now we will investigate by discussions with the client.
Thanks, Charles.
Thanks, Kurt. Kurt has reset the clock, so I'm staying on for another 5 minutes.
Hi, Charles.
Audrey,
Yes, hi.
how can I help?
Is there a program? Will there be like a set out program showing what will be discussed each Wednesday? So like, I think if one is prepared before the class, you'll probably have better questions to ask. So I just wanted to know if you have like a set out schedule.
We do have a schedule. I just need to, because of the classes that's been, the commencement of classes have been moved forward and forward and forward by obviously this pandemic that we are in. So there are schedules that were already completed a month ago. Those schedules will now, before the end of this weekend, I think, just be updated. And Adele is helping me a lot by distributing. I don't want Adele's job. She's extremely running around.
No problem.
So there is, but to answer your question, there is a schedule, and that schedule will be distributed to you guys within. I'll ask Adele if we can distribute that schedule with the next reminder of this class.
Okay, that's perfect. Thank you.
Charles, Adele.
Thanks. Hi, Adele.
I've sent out the schedule when I sent the initial email to the students, but I don't mind following up with a reminder and include your schedule again. I'll
Thanks,
do
Adele.
that.
Thank you, Adele. I will revisit that schedule because of the part and see, just to evaluate what we've done over the past week and including this class and how we measured against that schedule. And if there are any adjustments, we will send that schedule. But like Adele said, Audrey, please have a look at that initial schedule and then don't look at the dates, look at the session. So don't look at the date that we will, so this was the first session. So look at the next session and we will, but that's just a rough guidance on what we will be discussing, because maybe we might actually go a bit quicker on a specific topic. But yeah, that is, I hope I've answered your question.
Yes, perfect. Thank you so much.
Thanks, Audrey. And if there's any problems on that schedule, you guys can communicate. Guys, and yes, I'm posting my email address in the comments section. This email address is only to be used this week before we get the query forms. Or let's say up until we get the query forms, you guys can post any questions that you have to this link, and we can then communicate to decide whether we want a one-on-one session or whether we want whether it's a topic that everyone is struggling with and we can actually discuss it in a group. So I'm just posting my email address there now. Okay, you guys have reset the clock again, so I'll mute for another 5 minutes. Guys, while you're thinking, if you about any questions you might have, it doesn't have to just cover tonight's content. So anything that you might want to ask, let's talk about the assignments. You guys are allowed to ask questions on the assignment. I cannot do the assignment for you or with you. But if you ask me something similar so that I can explain the principle to you, that I can do. Just as a note.
Charles, I know you said we're going to discuss these other topics on audit evidence in the next session, but I just have a question on accounting estimates. I haven't done accounting for quite some time, and the next time I'm going to do accounting is on a third year level.
100%.
But now we are being tested actually on accounting estimates in the assignments. So my question to you is all accounting estimates prescribed by IFRS standards, or can the entity actually devise their own accounting estimates to use on certain accounts and transactions, or whatever the case may be?
Good. The question is the answer is very straightforward, but the application thereof not so straightforward. So IFRS prescribes that you are allowed to use accounting estimates where accounting estimates can be used. Okay, so it does allow for it. It does allow for scientific calculation, but remember IFRS speaks about something must be clearly measurable before it can be recognized. So that is also why it's on our list of audit evidence, because accounting estimates are sometimes one of the more complex areas that needs to be audited, because the client applied his or her calculation.
Okay.
And IFRS allows that. But that does not mean the external auditors or their experts should agree with the way they calculated it. So if we think about an estimate depreciation is an estimate.
Yes.
If you think about it, we are applying what we think the best calculation is on our assets, our various assets. So the external auditors, their job is to apply audit procedures on those accounting estimates to make sure that the calculation is clear and reasonable. And if they can't do it, they must employ a specialist, whether external or internal, to look at those accounting estimates. So that is the reason why accounting estimates are on this list. It has got an inherent risk of being a miscalculation. So that is the principle that you need to, for auditing, that you need to understand is that specific part. Doing accounting estimates specifically, you will never really be asked to do scientific calculations, not even on the third-year level for accounting, because it's a point that is extremely relevant to a specific company and a specific entity and a specific industry. So a specific industry will account for a specific estimate in a certain way. So that is what's making estimates such a bouncy topic. It's not set in stone. Hence, we need to gather relevant, concise, and understandable audit evidence on accounting estimates specifically. It's not like inventory that we can attend the stock count and say, yes, there's 10 cars on the floor. Did I answer your question there, Kurt?
100%. The way I understand it, IFRS just wants a clear explanation of which accounting estimate was used. If we can use the example of depreciation. It's not that IFRS says that a vehicle should be depreciated over its life cycle on this basis. It's up to the company to use their own basic say calculation of that.
Yeah.
So, but yeah.
Yeah, so the company will be challenged to provide the basis for their calculation, why they calculated that estimate the way they did. It is the same as a provision. Yes. If we think about doubtful debt, the provision for doubtful debt, it is an estimate. There's no scientific absolute proof that that amount of debtors will go bad or will default in the next year or the year thereafter. But experience in the industry and in the company has taught us that 40% of, say, the 60-day in arrears debtors will probably end up defaulting. So to make sure that our income statement is accurate, we will pass an entry through the statement of comprehensive income for that estimate to provide for it already in that year. So that company needs to then explain how did they get to their doubtful debt provision, which is an estimate.
Thank you, Charles. That's all from me.
Guys, if there's no other questions, I think.
Evening, sir.
Yes, Ellen.
Today I don't really have a question, but I just wanted to say thank you for offering these facilitation sessions. From what I see today, I can say that they are going to help me a lot because sometimes you'll be doing the work without knowing, do you really understand? But the way you were explaining and the questions that are being asked, I think we will do very well at the end of this semester. So thank you very much for offering your time to help us.
Thanks, Helena. I appreciate that. We are in this all together, and we will make sure that everybody has got the best chance of passing the subject as possible. Guys, on that positive note, and if there's no other questions, I hope you guys enjoy the evening, and I will Audrey's actually focused my attention again on the schedule. I'll just revisit that schedule for you, Adele, as well. And then if I think that there needs to be any adjustments, it will be communicated to everybody. But yeah, please, as far as possible, try and prepare for next class. Then another point before I go, if you are struggling with any other module, whether it's FAC, MAC, please also comment that in this chat section. So if you would like to have facilitation such as these for any other module, please comment them in the chat section. Please just make a note of it in the chat section, and we will take note of that and see where we can assist. And if there's nothing else, guys, then you guys must have a blessed evening, and then we will see you guys again next week, Wednesday, same time.
Thanks, Charles. Cheers.
Thanks. Bye-bye, everyone.